Welcome back. Sell-off in equities. Where'd the money go? In many cases, to the U.S. Treasury market. The yield on that 10-year for a time was at 2.11. We're at 2.13 right now. And as Rick Santelli pointed out earlier, it's sort of a uniform decline in yields along the curve there, Kelly, down about 9 basis points from starting around the 2-year all the way up to the 30-year today.
It is a big move. Let's ask our next guest about it. He's Mark Martiak from Premier Wealth First Allied. Mark, welcome to you. Traditionally, people would say this reflects nervousness, anxiety, weak economy. The Fed's, going to maybe push off its rate hikes. What do you think all of this action means, and how are you guys playing it?
Well, I'm advising my clients to stay focused, patient, and we'll get our rewards from the market. I believe that this is a price fluctuation. When we look at the technicals, all we see is we saw this great bounce yesterday, and then we saw this very surprising news, which the market doesn't like. Obviously, the Chinese government gave new meaning to the phrase "bull in the China shop," right? By making it a bear in the China shop, and the market felt like it, like Geno Smith, the quarterback of the Jets, getting sucker punched by one of his teammates today. So wow. I think we're okay. I think we're in good shape, and the technicals that we're looking at don't show any evidence that we are going to continue in a downtrend from tomorrow forward.
Okay. In one answer, you covered all of the news today. Hey, Mark, so are you running for the hills the way others are, going to the treasuries? Is that where you're putting some client money to work right now?
Well, thank you, Bill, for that question. We are not running for the hills, but we have diversified enough, looking at the risk in our profile, in our clients' portfolios, and our clients' tolerance for risk. So we've diversified into fixed income. Some treasuries, unconstrained bond funds, and definitely municipals for our high net worth clients. But we need that diversification right now. And you see that when a day like this happens and you get this surprising news. So yields are rising and prices are down.
What about Puerto Rico?
Our prices are up and yields are...
different parts of, you look at Chicago, even in the muni market. I mean, some of the places that you mentioned, including unconstrained bond funds, you don't necessarily think of these as the most obvious safe plays, or is everybody just that desperate for yields?
It is a good play, Kelly, simply because portfolio managers can go anywhere at any time, and that includes sovereign debt as well. So they could have treasuries, sovereign debt, munis, mortgage-backed securities, all diversified in a nice portfolio. Yeah. So, and of course, for the muni portfolios, you want that tax-exempt income on a federal, state, and local level if appropriate. So again, I was saying yields coming down, prices going up. That's what you see in a day like this. I still see fixed income as a very important, critical part of one's portfolio to give that stability.
Mark, thank you.
Thank you, Kelly.
Thank
you, Bill.
And good luck to your daughter. She's off to Cornell, Bill, in just a couple of weeks here.
A fine institution there in upstate. Thanks.
Absolutely.
Thank you. Thanks, Bill and Kelly.